Okay, this is stock market analysis. Any percent. So we'll right off the bat. All right, I already have Mozart preloaded in the window. Let's go. Music done. All right, we're under. Great. All right, next thing we want to do. We're gonna do our Benjamin Graham screen. This one is free. I sent it to all of you. Okay. Or I can put it in the description of this video if you want. Anyway, we're looking for a company with working for a low price to book ratio. That's why they're sorted this way. So ideally, we're looking for ones on the top, but I recognize all these. They've been up here for a while. They're not going to recover. It's 5-1 that's off a high. Valhi Chemicals. They're US based. That's good because I need that for the value line for the last check. So we found one. VHI. Valhi. They're chemicals, but they're off a high. They can recover. Alright, first thing we want to do, let me find it. Scroll down. There'll be a little blurb. I'm off of the game. Here we go. Alright, there's a little blurb about what the company does. Titanium dioxide. I'm already in titanium dioxide. I would not want to buy this. Kronos. I'm investing in Kronos. So this is kind of weird for me, but I'll analyze it like I'm just analyzing to invest this. Let's see. Yeah, looks like paints and things for office supplies and stuff. Anyway, they do chemicals. That's all we really need to know here. All right, first thing, we go to ratings tab. Looks like it's a sell rating, but they only have one analyst. That's big. We don't want Wall Street analyzing this because otherwise they'd be buying, and then we'd know that we're wrong. They're not. They're selling. So Wall Street has no clue because they only put one analyst on this, and he's dumb because he's going to sell it. And we can already confirm if we go right here, balance sheet, tangible book value per share is $17.94. Share price is not much higher than that. So if they have any amount of growth whatsoever in the business, we can justify buying this, and we know that the Wall Street guys don't. So we get income statement, gross profit, somewhat flat, operating income somewhat flat, but it's pretty big. Earnings per share on a downtrend, but looks like it's coming back up here. We want to be looking at diluted EPS ideally. But their shares have not changed. They have not diluted their shares, so these two numbers will be the same anyway, basic and diluted. But this is good because it means they're not issuing new shares. If this is going up, that's a bad sign. That means they're diluting their shares. It means your shares represent less. Dividend per share is decreasing. Not too good. Payout ratio, this is something with the dividend. They're paying out less of their income, which means they have room to grow the dividend. We'll take that. All right, now we got cash flow. Here's what we're looking for here. We want cash from operations up. That's great. We want cash from investing negative. We want them to be investing money because that means they have extra. We want cash from financing negative. We want them paying off their debts, and that's what this is. And it's at an all-time low. That's probably why they haven't increased the dividend. So that's good. Net change in cash, positive. Great. This is looking like a great buy. All right, we go straight to earnings. Earnings estimates. We don't need that. We go earnings summary. It looks like for the future, looking like a downtrend. That's not too good. We'll go dividends. Dividend yield is low to their sector. Not too good, but we already established they have room for growth. So I wouldn't be too worried about it. And it's only a 3% payout ratio, which is huge compared to the 50% for the chemical industry. So that's pretty good. They went for a split. That's why their dividends at an all-time low, because they split one for 12. So this should be times 12, which means the dividend went up. So we already fixed the dividend issue. PE, low compared to sector. Less than half. Less than half. That's huge. We'll take that. PEG ratio, 0.08. That is absolutely tiny. That is great. We need that. All right. This song has lyrics. We'll skip that. All right. We'll take that. Dividend yield. All these songs have lyrics. Skip that. Can't afford to lose time here. Revenue is growing. Profitability, they're profitable. Momentum, not too good. That means they're being sold for cheap. Their momentum, they're on the way down as a stock. This is great. This is looking like a great buy. So compared to peers, we already compared it to the industry all the way through. We can look at things like the quick ratio, which is and the current ratio, which has to do with debt. You want these lower to the sector. Looks comparable, if not a little bit high, but I'll take it because book value per share, that's not even tangible assets. That's just normal. 31.26, that's above. All right, we're good. I would issue a buy rating on this. So last thing. Oh, shoot. All right, we're done with seeking alpha checks. Oh, right, we have to do SEC checks. We're checking the SEC website to see if they have any insider buying, which is Form 4. The last one, here's one. They acquired shares. This is huge. We could go through all of these for days and see that they're all acquiring shares, which means the insiders love this stock. Here's another one. They're all acquiring shares. These are the last 3 Form 4s, all filed on the same day, granted, so they might have got free stock. Anyway, we'll take that. SEC says it's going to go up. I say it's going to go up. We're checking for a price target on Value Line to confirm our reasoning here. Confirm our price target of up, basically. That's all I can give is up. All right. Unfortunately, Value Line sometimes doesn't put price targets for less known stocks, but we can see they don't really think it's a predictable stock, which means if it's on the downtrend, it could be going up. So we can check, however, Wall Street analysts still give it an upside. The same guy who's selling says it's still going to go up. So we can confirm there this stock is still valued, even by pessimists, above what it is currently. So we'll take that. And that's the speed run.